one and all gathered here today, and a warm welcome to this thoughtful Tuesday of this week. Companies audit, if we have to say, is a very difficult task for all the chartered accountants. CA stands for companies audit, and CA also stands for a chartered accountant. So we both have to, walk hand in hand with the companies audit what we do. And we are having a lot of responsibilities, a lot of amendments have taken place, a lot of liabilities are placed on the chartered accountant. And being CAs of the new generation, we need to have a lot of understanding of all the changes that's happening, all the amendments that have taken place, and what more responsibilities and what more diligence should a chartered accountant do the audit with. So today, Mangalore branch of SIRC of ICAI has organized this webinar on companies audit for the financial year 1920 and the auditing standards that we have to follow. So we have eminent guests amidst us today. It's indeed a pleasure for the Mangalore branch to have such great personalities with us. We have CA Dungarchand U. Jain, who's the chairman of SIRC of ICAI. A warm welcome to you, sir. And also today's session speaker, CA Joman K. George, the past chairman of SIRC of ICAI. Indeed, it was a pleasure to have you last time with us in the institute, and also we're all eager to hear you on this topic, company audit financial year 1920 and auditing standards. Once again, a warm welcome to all the delegates and the committee members. So let's make the best out of this webinar. Moving on, it's a new thing in our webinar, and most of the times we request in our formal functions to have God's blessings and the Almighty's blessings on all of us. So we request to conduct a prayer so that we can have blessings of the Almighty on this particular webinar. Over to CA Shweta.
इतनी शक्ति हमें दे न दाता, मन का विश्वास कमजोर होना, हम चले नेक रास्ते पे हमसे भूल कर भी कोई भूल होना, इतनी शक्ति हमें दे न दाता, मन का विश्वास कमजोर होना, दूर अज्ञान के हो अंधेरे, तू हमें ज्ञान की रोशनी दे, हर बुराई से बचते रहे हम, जितनी भी दे भले जिंदगी दे, बैर होना किसी का किसी से, भावना मन में बदले की होना, हम चले नेक रास्ते पे हमसे भूल कर भी कोई भूल होना, इतनी शक्ति हमें दे न दाता, मन का विश्वास कमजोर होना, मन का विश्वास कमजोर होना.
Thank you, CA Shweta. It was indeed an apt prayer for the current times. Now, we all are facing so much of turmoil and the lockdown situations, the changing economic scenarios. So we are praying to the Almighty that give us the strength to face it with confidence, give us the strength to get all the knowledge that is required for the current scenario. Thank you, CA Shweta, once again. I now request our chairman, CA SS Naik, sir, to formally welcome all the dignitaries and the delegates to this webinar. Over to you, sir.
Respected dignitaries, today's SIRC Dwayas, CA Dungarchand Jain, our present SIRC chairman, as well as our SIRC past chairman, CA Jaman K. George, and all our members in the colleagues in the committee, and all respected members of the Mangalore branch, seniors, juniors, and all. Good morning to all of you.
Morning.
Today it is a special day for us, friends, because as now already C.A. Shweta has sung a beautiful song, Itni Shakti Hame Dena Data. Data is giving us full of strength, but strength is again increased because of two SIRC Dwayas. They are with us to support our Mangalore branch. They have been supporting, they continue to support our Mangalore branch during this Golden Jubilee period. Sir, we are celebrating Golden Jubilee Foundation Day on August 18th and 19th. August 18th is our 50th Foundation Day, and we are very fortunate to have our beloved, most popular ICAI President, CA Atul Kumar Gupta sir, as our inaugurator, as well as our Jambu Saria sir, ICAI Vice President, for as a chief guest, and other modalities are yet to work. This is a good news for all of us. So this is the occasion we have to plan for this founding day, 50th founding day of our branch. There is a saying in Malayalam, but I will not say in Malayalam because my pronunciation may go wrong, but I will tell the translated thing. Life is like a lamp flame. It needs a little oil now and then. So, sir, chartered accountancy profession itself is like a lamp flame. But because of these CPE seminars, we are adding oil now and then, and we are fueling our lamp and to give more brightness so that we can advise all our clients with our abundant knowledge and up-to-date all these happenings in amendments and enactments. Sir, one more thing, our Dr. Jain sir, he is from Madurai. He is blessed with the Madurai Meenakshi's entire blessings are with him. Of course, he will also transfer those blessings to all our Mangaloreans also. So there is a saying, poet Kannadasan in movie Padakannikai. In that he has told, Viduvarai Uravu, Vidivarai Manavi, Kaduvarai Pillai, Kadasivararo. The meaning of this is, when we go, then relatives, they come near the house. Wife comes till the street. Children come till the graveyard. However, when we go alone. But all our deeds, good deeds, and our relationship, all these things will always prevail. Sir, today is a special day for us. Both of you have agreed to grace our Mangalore branch with your rich exposure and experience. I remember CA Jamun George sir also, because last year it was excellent SIRC conference. I have never come across such a grand event in Grand Hyatt. So today also I cherish that grand moment, sir. It was celebrated in a very grand way. It was like a festival rather than a conference. So naturally, it shows your leadership, and SIRC chairmanship is like a stepping stone for higher position. So both of you definitely will make to our central council, and both young stars, I call you all both young stars, will definitely go to higher ladder, and you will occupy the highest position of the Institute of Chartered Accountants of India, sir. We wish you all the best. And regarding Jamun sir, one more thing I want to just make a mention. It is not a praise, it is a fact. In Sanskrit, Subhashitakara always tells, Vidya dadati vinayam, vinayat patratam, patratvat dhanamapnoti, dhanadharmam tatas sukham. The meaning is, Vidya dadati vinayam. If you possess knowledge, you should always possess humbleness. Both are with you, sir. Then, when you have knowledge and humbleness, vinayat patratam, automatically recognition and respect, automatically you will command. You don't demand, you do always command respect and recognition because of your knowledge, your humbleness, and your respect. Then patratva dhanam apnoti. When you possess knowledge, when you possess humbleness, when you possess recognition, automatically money will come to you. I think money is not a matter for both of you. So you have made a lot of money also. So out of this money, dhanat dharmam tatas sukham. When a person is full of knowledge, full of recognition, and full of what you say, that is money, then the next stage is to distribute the knowledge, distribute the money, and distribute the recognition, distribute the happiness among all. So both of you are, sir, SIRC Dwayas. I hope you are distributing all your rich knowledge with our CA fraternity. That's why we have invited you for addressing our chartered accountant as well as students are also invited. So it is audit 2019-20 as well as auditing standards. So I don't want to take much time, but at the same time, SA 210, that is on the audit engagement, SA 230, audit documentation, SA 240 in relation to fraud, SA 500, audit evidence, SA 530, audit sampling. All these are all very important for us, and you may all of are aware in Satyam what happened. So they have relied on internal evidence rather than external confirmations. We should be, whatever may be our confidence level, we should always depend upon external confirmations. Also, now CARO 2020, even though it has not been introduced for the last year's audit, it has been introduced for 31/3/2021, but it is applicable from current year itself. Friends, be careful and be aware of all the situations. You have to certify on stock statement, quarterly information reports, GST returns, all these matters are there. Our responsibilities are increasing day by day. That's why definitely we should be update ourselves with the latest developments. We have invited today CA Jamun George, who is a veteran in the field of company audit and auditing standard. Sir, welcome. We, on behalf of Mangalore branch, we welcome you for this today's webinar, sir. At the same time, CA Dungar Chand Jain, very young and energetic person. He has occupied the position of SIRC as a chairman. Even though there is a lockdown, he has showed us the way that even though there is a lockdown, we are not down, because he has been conducting series and series of webinars for the benefit of our CA fraternity. He has been guiding force for all the branches. So he is like a bridge between the branches and the ICAI New Delhi. There is a saying, bridges and walls are built with the same material, whereas bridges connect the people, walls divide the people. I know that CA Dungarchand Jain sir will never stand as a wall between the branches and the ICAI New Delhi. He will always act like a bridge. With this small introduction, I wholeheartedly welcome CA Dungarchand Jain sir for our this webinar as a chief guest. Thank you.
Thank you, sir, for those words of welcome. Indeed, as you said, both of them are the stars with whose light or knowledge of light we need to, move forward and go through and understand all the knowledge that we need to acquire. Thank you once again, and a warm welcome to you too, sir. Moving on, it's time that we listen to our special guest today. I request CA Gautam Paidi to introduce CA Dungar Chand Eugene to the delegates.
A very good morning to all our members who have joined for this virtual CPE meeting this morning. Today we are indeed pleased and delighted to have our SIRC chairman, DC Jain sir. Would have loved to have host him physically over here in Mangalore, but due to the prevailing pandemic position, we are forced to come with this virtual session. But nevertheless, sir has come with us, joined us this morning. And to inform more about our chairman, is a graduate and a chartered accountant in practice at Madurai. He has passed his higher diploma in software engineering. He did his articleship training with the leading CA firm at Chennai. He has also qualified the DISA exam in 2005. He's been in practice since 2005 and is currently a managing partner of a firm having offices at Chennai, Madurai, and Cochin. Prior to involving in the SIRC, sir has served in the Madurai branch from the tenure 2010 to 16, wherein in the year 2015-16, he was the chairman of the branch. This is his second term in SIRC, wherein the previous term was 2016 to 19, wherein sir has served as the secretary of our SIRC during 2017-18. Last year as the vice chairman, and currently serving as the chairman of our southern region. Sir also is an ex officio member for Madurai, Shivakashi, and Pondicherry branches of SIRC. Presently, he is the chairman of all committees in SIRC, but in the past, he has served as the chairman in the CPE committee for members in industry, and IT and digital transformation committee. He has always been a topper in school, having accolades in accountancy, as well as corporate accounting, and was awarded second prize for the best presentation in general management and communication skill course conducted by our ICAI. He is a member of the Bombay Chartered Accountants Society, Mumbai, and All India Federation of Tax Practitioners, Mumbai. His areas of interest, he is having keen interest in the study of capital markets and specializes in derivatives and taxation, and has given guest lectures and presented papers at various institutes. He has been a visiting faculty at Madura College and Fatima College, Madurai. He has presented papers on IT with a reference to DSCs, e-filing, and uses of Excel in various forums and CPE meetings. Being tech savvy, as we all know, he has been instrumental in preparing few in-house softwares, and also has prepared a template on Tamil Nadu VAT audit in Excel, which is benefiting a lot of chartered accountants there. He is a regular contributor to the monthly newsletters, and he has his own bulletin on Excel tips, which he has shared with a few ICAI branches. He is an active participant of Jan Seva. He is not only serving as members of a CA fraternity, but as a social service is also a part of an organization called Jan Seva, which is helping those in need, and has also authored a book on Excel tips covering users of MS Excel for professionals. With this introduction, I once again welcome our SIRC chairman and all the members and all the delegates who have joined in for this virtual CPE meeting. Are very eager to listen to your words of wisdom, sir. Over to you.
Thank you, Gautam Pai.
Yes, sir.
In fact, before I get into my speech, I request everybody to stay safe, stay careful, and stay immune, because we are going through a very, very tough time. And aptly, the prayer was sung that Itni Shakti Hame Dena Data. In fact, we'll have to be very careful at these times to see that our health is given the topmost priority. And I'm very sure with that, everything will kind of follow suit. So, beloved CA Shantarama Nayak, Chairman of the Mangalore branch, all other managing committee members, the past chairman of SARC, CA Joman K. George, and my colleague in the regional council, who brings a lot of value in our region with his past experience, in fact, past and vast, I will say. So, a very good morning to all of you. It is most gratifying to participate in today's virtual CPE program organized by the Mangalore branch, for which I express my sincere thanks to the organizers for inviting me and share my thoughts amidst you amongst this August gathering to our elite professional fraternity joining this virtual CPE event. On any other day, we would have met physically, but now things are kind of happening virtually due to the prevailing conditions. I'm also delighted to note that all the branches of SARC, understanding the prevailing unprecedented situation, have risen to the occasion to ensure that one of the main objectives of the branches and continued benefit of the members is happening by conducting the virtual programs. Your Mangalore branch has also conducted such virtual programs last month too, and maintains the momentum of activities intact. I offer my congratulations and appreciation to the chairman, CA Shantaraman Nayak, chairman of the branch, and his dedicated team. Conducting the virtual programs have been a unique advantage because we are able to reach a lot of people with ease. And conducting these virtual programs is not new to us, because ICAI has been conducting these webcasts quite some time, right from the year 2011. And that has been initially done through Gyan Darshan, and later we got connected through the satellite-based interactive continuing professional education program through the teleconferences. So these programs were viewed by members and the workplace, and those who personally present at the ICAI, the regional branch, all are also kind of entitled to CPE credit. So previously, where we started with the unstructured CPE credit, we were able to now take it to the structured CPE credit also. I also express my sincere thanks to all our members who supports these initiatives and provide motivation to programs. I'm sure today's and tomorrow's program will add immense value to the participants. I also request all the members to keep participating in large numbers, because it is your participation which will motivate the branch and the organizers to see that they conduct more of such programs. I compliment the organizers for inviting our esteemed and erudite members of our profession to be the resource persons. CA Joman K. George, CA N. Nityananda, and the chief guest of tomorrow's event, CA Babu Abraham Kallivailil, whose knowledge in abundance will make the sessions lively, informative, educative, and interesting too. And the subjects of company audit and auditing standards, and that of tomorrow's session on new code of ethics for CAs is made applicable from 1st July 2020, have a great significance in our professional practice, as these subjects are dynamic in nature and the very need for us to stay relevant. It is therefore imperative that our members should have continuous updation of the changes that are happening in our own profession as well as the government through various notifications, circulars, guidance notes, and all other channels which we come to know. And I'm sure in the next 2-hour session, a resource person would enlighten, enhance, and add value to the proceedings. And on the standards on auditings, the accounting standards, the auditing pronouncements, what you call, I always tell that these are our Bible, Bhagavad Gita, Quran. So if you kind of take care of those things properly, I'm very sure whenever you have doubt, whenever you need clarity, these things will give clarity to it. And as the chairman rightly mentioned, that due to the Satyam scam, a lot of things happened, and we had to kind of gear up to bring back the trust. And let me remind you that when Satyam fiasco happened, there were the involvement of 2 chartered accountants who brought things in good books. It was Deepak Parekh and CATN Manoran. So the Satyam fiasco later went on to become a Satyameva Jayate, where all things what was true prevailed, and we were able to kind of bring back the confidence. And it is my duty to say a few words about the organizing team and the branch for the zeal and vibrancy with which they conduct the affairs of the branch, following the legacy that has been inherited from their predecessors. On this occasion, I recall and recognize the services of the first office bearers of the branch, CA KN Basri, CA VM Shetty, CA A Raghavendra Raoji, who incidentally was a member of SARC during the term 1979 to 1983, and treasurer of SARC during the year 82-83, secretary between 21st September 1983 and 15 November 1983, and SICASA chairman during the year 1980-81. And CASS Kamath, who was the chairman, vice chairman, secretary, and treasurer of Mangalore branch of SARC, respectively, when the branch was formed in the year 1971, who all have laid a strong foundation and left behind a mission and vision to the branch for their successors to follow. I should record here that the successors have been able to take things forward to keep the activities of the branch dynamic and the flag of the institute high by their continued selfless efforts of the profession at large. It is through these performances that the exhibition of the branch have received many awards and recognition from ICAI and SARC. I wish the branch all success in their future endeavors to serve our members and students in great measures. I'm also happy that the branch during the year, as the chairman mentioned, during the tenure of CA Shantarama Nayak as chairman, who is the 32nd chairman of the Mangalore branch, will be entering into the golden jubilee year, having formed with effect from 18th August 1971. It is also a double treat so far as the Mangalore branch is concerned. When they are celebrating their golden jubilee year, it will be a following year. Mangalore branch of SICASA, the Students Association, will also be celebrating the golden jubilee year, as it was formed in the year 1972 on 1st July. I offer my best wishes and greetings to the Mangalore branch of SARC and the Students Association in advance for achieving this memorable feat to be remembered and recalled in the annals of Mangalore branch. At SARC front, would like to tell we are also conducting a lot of programs so that it benefits members. And we have also created one SARC grievances week on every Friday. If members who are having any complaints, be it anything, be it connecting to an institute through CPE, or you're not able to get your queries resolved, we request you to kindly reach us. The announcement has been placed in the SARC website There's a link given where you can, raise your query so that we reach out to you, and we are seeing that the queries are able to be, the queries are getting resolved to your satisfaction. And regarding the SARC conference for this year, this time, probably the date should have been announced, but the things are not looking favorable. So we're waiting for things for the clarity to emerge, and once that emerges, we'll come with the fresh dates where I will be happy to invite all of you to Madurai and get the blessings of Meenakshi in person, rather than passing it from me to you. Before I conclude, I invoke the words of Benjamin Franklin, who says, an investment in knowledge pays the best interest. And I'm very confident that your investment in time today and tomorrow will bring in best in terms of knowledge dissemination and accumulation. Let us confidently look forward to overcome the present trauma due to COVID syndrome. Days are not far for us to meet personally and come together. I'll be eager as all of you, to exchange our thoughts in person at the earliest given opportunity. And they say coming together is a new beginning, staying together is the continuing the progress, and working together is improving the success and relationship. Towards this, we will aim to achieve, and we'll accomplish this very soon. I once again thank all the organizers for making my presence possible and to share few of my thoughts with all of you. Thank you very much.
Thank you very much, sir. As you said, learning is a continuous process, and we CAs are rightly implementing it in our career by conducting a lot of CPE seminars. And Mangalore branch, I can say, with the able leader like SS Naik, is indeed moving the right path by conducting a lot of webinars to educate all the CA fraternity in Mangalore. Thank you once again, and indeed it's a pleasure to have you here today. So moving on, I will not waste much time. I believe everyone is eager to wait and listen to CA German K. George, our session speaker for today. To briefly introduce CA German K. George to the audience here, he's a fellow member of the ICAI with 28 years of diversified practice experience. He was the chairman of SIRC of ICAI for the 2019-20 term, and is the founder and managing partner of JVR and Associates, a 8-partner firm specializing in corporate audits and consultancy. He is a mentor for the Philip Macmillan Woods, a multidisciplinary accounting and consulting firm based in Dubai. He's also the faculty for auditing at the ICAI and has taught more than 10,000 students. He's a regular resource person on professional circuit on accounting and auditing standards and corporate audit, and he has done more than 800 presentations and also a peer review trainer. He was a member of the Auditing and Assurance Standards Board of ICAI and was a chairman of ICAI Ernakulam branch in 2002-03. He's traveled extensively in UK, Middle East, and the Far East, and been the past president of Rotary Cochin Central and also member of various social clubs. He's the honorary treasurer of the Kerala Management Association and also the member of the advisory board of St. Teresa's College, Ernakulam. Sir, indeed, these words are very little for what you are. Indeed, we know you are a very down-to-earth and a simple person, and we all are eager to listen to you. Over to you, sir, for taking over the session.
Thank you very much. Good morning to all of you. The very dynamic chairman of the Mangalore branch, very senior colleague, I can say patron for me, SS Naik sir, who is a very happy man this morning. As Sweta was reciting the melodious prayer song invoking the blessings of Almighty, especially Shakti and Mangi Vishwas. He scored a century in the first 10 minutes like Virat Kohli. 100 participants we touched. So God's presence was with us, both especially from Madurai Meenakshi, Madurai, blessings are also there with us. So he's a very happy man. Nice to be being invited to Mangalore again. Ideally, I should have been there physically. I've enjoyed so much of the togetherness, camaraderie, fellowship, and the interaction, warmth I've really enjoyed. Surely, as things get better, I think we should start on a very positive note this morning because research is moving fast. The Oxford research has reached the 2nd level, and hopefully a vaccine will soon be out, which will take the scare away. Let's all pray for that. As DC wish, Shakti and good health and being cheerful is very essential. So let us stay safe. The Secretary, CA Musba, other managing committee members, Subramania Kamath, the two Gaudams. Gaudam Pai is very actively introducing the chairman, Prasanna, and we haven't invited Geeta ji. Geeta should have been there. It's our ex officio member, and my chairman, I would say, Anandapatnama sir, who is Nayak sir, is looking very casual, relaxed in a t-shirt at home. So he's a past chairman, so he's quite relieved and happy. We had a great time together last year. Are the very respected senior members of the branch, right from the founder members, about whom DC spoke with so much of respect and gratitude for bringing up the branch from that level. And extremely happy that the Golden Jubilee year, if things turn out better, probably we can have the president, vice president, all of us would like to come to Mangalore for the celebrations in August. And very, very dear colleagues, and I should especially compliment Nayak sir for giving a free entry to the students. So as of now, we have 146 participants. I'm very excited that there are a lot of students because they are the future. And for this topic, which is company audit and standards auditing, they are the field marshals. They are the people who work on the field, taking instructions from us. So it's very important that they also get to know the right approach to the topic. My big thank you to Nayak sir and the entire Mangalore team for this opportunity of interacting with you. Special thanks to DC for sparing your valuable time. And one thing which has started well and taken off well is a very good initiative of that grievance redressal at SARC. Anyone who has unresolved issues can straight away interact with the chairman and the officers, and the problems are getting resolved. A wonderful initiative, DC. Thank you on behalf of all the members of the Southern region as immediate past chairman. So with that, once again, wishing you all the very best, hoping that all of us are taking the required care to be protected from this very, very fatal issue. We have to be careful. So with that, let me move on to the topic right away without taking much more time. And with that, Yashaswini, you're doing the comparing very, very well, seamlessly. So with your permission, I will try sharing the screen.
Yeah, Chairman and Jovan, I have another meeting. I'll have to leave. Kindly excuse me, please.
I understand, DC. Please.
Thank you. Thank you.
Is the screen visible?
Yes, sir, it is.
Yes. So company audit special considerations for 1920 particularly, because we are at the threshold of doing the company audit for the year 1920. Some of us have completed. For companies in the listed space, we have completed the audits. Other audits are in progress. Some of them we are able to do it physically. Others we are doing a virtual audit or remote audit we are doing. So let us see what are the things which are important from this audit angle. The impacting factors, remember doing a similar presentation in Mangalore last year. The younger members and students, some of you would not have been there, but these are the very important things which we should understand. The impacting factors as far as the company audit is concerned is that there's a very well-regulated framework, a well-laid out statutory framework. Let me touch upon some of the basics initially. The Companies Act 2013, most of us haven't read that in detail, has two important chapters. Chapter 9 on accounts, section 128 to 138, and chapter 10, audit and auditors, that is section 139 to section 148. So these two important chapters are very, very important and very much well laid out from an accounting and audit perspective. Preparation of financial statements, which is a job of the management, and then of course the auditor's responsibilities. I'm sure all of you know that the auditor's powers and duties of auditors are given in section 143. Professional pronouncements, accounting standards and standards in auditing. Accounting standards are for the preparation and recognition and the preparation of financial statements. And then auditing standards are the implementation guides for discharging an audit. And the specific reporting requirements we have is that we have CARO requirement under 143 fraud reporting, the specific reporting requirements. And in applicable cases, we have the internal financial control reporting also. And COVID-19 effect Institute has come out with 5 detailed pronouncements for guiding the members in this very unprecedented, when we are doing a work like never before situation. What are the things that we should see is all covered in this is the COVID-19 pronouncement. So the statutory framework, 2 sets of professional pronouncements, plus the guidance note, etc., etc. Implementation guide is there. Then we have application guide. We'll see as we go by. Specific reporting on COVID-19 effect. The backdrop in which that we discuss, I have already mentioned, is the Companies Act 2013. The lot of consequential additional requirements under the Companies Act 2013, and the provisions are very highly punitive. Penalties are very high for non-compliances. In various sections, it's very scarily high. So this is the backdrop in which we have to decide. This is a screenshot of the Companies Act 2013, Chapter 10, how it looks like when you go to the MCA website. My dear students and younger members, those who are reading the Companies Act, never buy a book. For procedures, you can buy a book. The best way of referring to the Companies Act 2013, probably I would say the only way you should refer to the Companies Act 2013 is to go to the MCA website, www.mca.gov.in. On the left-hand side, you would see the Companies Act 2013, which is the ebook which has the latest developments, pronouncements, latest amendments it has. So that is a way. Then you can take a download, a screenshot, and save it in your desktop and start referring that. Because it is not yet settled, it is still dynamic, changes are happening. So one has to keep track of it if we are serious about corporate law practice and company audit. When I talk about corporate law practice, I have been urging members. Last year as chairman, I visited 39 of the 45 branches of the southern region and urged the members to reinvent corporate law practice. We have pledged it to the company secretaries. It should not be the case. Some of our domain areas, including tax practice, faceless assessments and all that, with that, it is fading out. GST is a new area. Indirect tax is picking up very well. Similarly, I think we should, some of us at least, if there are more than 3-4 partners in a firm, why can't a partner spend 60% of his time on regaining, if he or she is not fully aware of the latest developments, attending programs exclusively on this, so that specialization will develop. Right from incorporation to striking off companies, liquidation. And today, if we can have the right blend of IBC also, insolvency and bankruptcy court. One of my partners are qualified. We are now doing this insolvency assignments. Very lucrative, very completely different from the routines which we are used to. So with all that, I think we should go back to company law practice. And the way that we refer to the Companies Act is going to the website and reading the e-book. And e-reading has really come of age. All of us are now used to that. Am I audible? Is it going okay? Yashaswini, can you speak up, or Chairman sir? Nayak sir?
Yes, sir. Yes, sir. You are audible.
Clear enough?
Yes.
Am I looking smart?
Perfect.
Very
Perfect,
smart.
sir.
Very smart.
Thank you, sir. Okay, right. So this is a small introspection. I think last year again.
Smart as usual, sir.
Sorry?
Smart as usual.
Oh, thank you so much. Honored. See, FRRB is Financial Reporting Review Board of the Institute, which does the review of listed companies, financial statements, annual reports of listed companies, and big companies in the unlisted space. There, the findings are very, very disturbing. Non-compliance with accounting standards, if you make a pie chart, PIE pie, not PAI pie, okay. And I'm in Mangalore, when I say pie chart, it should not be mistaken. And my friend MN Pai is already there. We studied together in Chennai. So 74% non-compliances are from accounting standards. Companies Act 2013, Yashaswini rightly said, CA is interchangeably used for Chartered Accountant and Companies Act, Company Audit. Schedule 3 non-compliance, the formats are not proper, disclosures are not proper, as high as 13%. CARA non-compliance 6%. And when it comes to standards on auditing, scant regard, members are not fully aware. Members are not applying those standards, not doing the work properly, which is resulting in very poor audit quality, plus lot of disciplinary issues. When I was chairman last year, used to have the disciplinary hearings, DC hearings at SARC office. A lot of members come there. We are not supposed to interact with them because they are kind of seen as people who have done crime and all that. So therefore, it's very important that we approach audits with some more of involvement and some more of seriousness. So essays is scant regard when I say That is why institutes today made it mandatory for branches to conduct a lot of programs on standards and auditing. So is the case with the Code of Ethics. I'm happy that the branches, I saw the invitation has come out very well, very colorful invitation. And nice to see Nityananda sir coming to the forefront after a long time. See, Babu Abraham is the chief guest. That is day after tomorrow, I think. And so the Code of Ethics and Standards Auditing are mandatory topics which the central office is directing, rather instructing branches, program organizing units to have programs on. So here we are with the company audit with a special thrust on standards and auditing. So this is one more thing which is slightly very, very disturbing. This is a statement made by the MCA secretary. We do not expect auditors to find a needle in the haystack, but they must see the elephant in the room. Since it's closed this thing, student can also note that an MCA secretary making such a comment is not very desirable. And on 1st of July, the CA day, the business line editorial was on the contemporary CA. There they made a reference to this, saying that the elephant in the room is making rounds in the news media. So that cannot happen. So we have to be more careful. We have to, young members and students, you are the future of the profession. You have to uphold, adhere to the best possible standards and bring about good governance in corporate India, because India is galloping forward as one of the fastest growing economies in the world. If we are the 5th largest today, slowly, gradually, steadily, we will overtake Germany and UK and move to the 3rd position after America and US and China. And there's a lot of disfavor about Chinese products today because of the recent developments on the military front, as well as about this virus and all that. Therefore, India is going to see a major jump, whether it is manufacturing service or whether India has already become the pharmacy of the world. Whether it is hydrochloroquine or paracetamol, we have been exporting large quantity of medicines even to Europe and many advanced economies, and therefore the potential is so huge. When we are gaining that, the profession will naturally blossom forth riding on this growth story, and therefore we should gear up, develop domain knowledge, and most importantly, keep up the integrity and credibility of the profession. Let's quickly look at what is the recent, not very new, recent developments is new format of the auditor's report. Last 2 years, we have SA 700, standard or SA 700, which we'll discuss in detail a little later. New reporting requirements, 701, that is KAM, Key Audit Matters, we'll see. Companies Accounting Standards Amendment Rules 2016 has happened. It's a lot of changes. Students might know that the standard on depreciation, AS6, has been deleted and it is merged with the AS10. AS10 was called Accounting for Fixed Assets. Now it's called Property, Plant and Equipment. So depreciation standard has been merged in there. Everything relating to depreciation, you will find in paragraph 40 to paragraph 60 of AS10, which is Property, Plant and Equipment. One amendment. Another amendments we'll see as we go by. Cash flow statement is today part of the definition of financial statements. Section 2, subsection 40 defines the financial statements to include cash flow statements. So all companies except small companies, dormant companies, OPCs, and startups have to prepare cash flow statements every year as part of the general purpose financial statements, financial reporting, and filing with ROC. And the auditor should also, in that case, comment on the cash flows we have examined. And then the cash flows give a true and fair view of the cash flow statement, gives a true and fair view of the cash flows for the period ended or the year ended. Schedule 3, we have the new format, which we are kind of used to. AS format as well as Ind AS format. Ind AS format is completely different. Today, as you know, we will discuss that also in detail. All companies, non-corporates have not been covered under Ind AS. All companies, public, private, all those companies having net worth of not less than 250 crores are in the Ind AS format already, Ind AS regime already. NBFCs are also covered irrespective of size. NBFCs have to be under Ind AS. Banks have not yet been. People say, experts say that there is an orchestrated delay in implementing Ind AS in the banking sector because already the balance sheets are very weak. If they take a hit on account of fair value measurements and all that, it will create a problem, and therefore there will be some more delay in Ind AS. This is not my version of the story. This is what experts in the banking field all keep on saying. Depreciation is now based on useful lives. No more arbitrary rates we used to have in Schedule 14. Now it is Schedule 2 of the Companies Act, which tells us the indicative useful life of various assets, and the auditor, the management has the flexibility to adopt a different rate. We will see as we proceed with the presentation. Fraud reporting under 143.12 is a new requirement, the huge penalties for failure. Ind AS, I did mention, has been made applicable for certain companies. Auditing standards made mandatory. I will take 2 minutes here to explain this because it's very, very, very important. And our today's seminar topic is captioned as Company Audit 1920 and Auditing Standards. 143, Section 143 is captioned as Powers and Duties of Auditors and Auditing Standards. 143. 143 subsection 9 says, every auditor shall comply with auditing standards. Not the company, not the management, not the board of directors. Every auditor shall comply with auditing standards. So which means that this is a requirement under the law, part of the statute book today, auditing standards. And non-compliance can result not only in disciplinary proceedings by the institute, but also by the MCA. And you should be aware that 132 is notified and NFRA is gaining strong feet. So NFRA can take direct recourse against members of ICAI. Of course, CMA and company secretaries also. But that is no consolation. We have to be careful. CARO 2016, Nayak sir did mention that 2020, CARO 2020 is deferred by 1 year. This year, since we are specifically discussing 1920, we will confine to CARO 2016. ICDS, Income Computation Disclosure Standards, 10 of them applicable from the financial year 16-17. We will briefly go through that in the slides to follow. Now, these are the COVID-related pronouncements issued by ICAI. Nayak sir, I will surely, those who are noting down, students particularly, how to make the best out of a program like this is to keep a notebook or a writing pad, take a pen and jot down what are the points to be noted.
We will upload in YouTube also, sir.
Sure, my pleasure, sir. And this slides, PowerPoint, I'll share with the branch, which can be shared with the members.
Yes, sir. Yes, sir.
Accounting and auditing advisory, impact of coronavirus in financial reporting. Going concern. Going concern, as students would agree, it is an accounting assumption conventionally. Going concern, consistency, and accrual are accounting assumptions. But in the given unprecedented situation that we are in, many of the businesses are not able to go forward. Many of them have to pull down the shutters, close, lockdown. Going concern is a major concern. So one has to be extremely careful in dealing. The audit has to be extremely careful. One thing which they talk about is that the auditor should threadbare discuss with the management. Management may try to hide something. He has to do deep dives, drill down deep dives in finding out where going concern is at stake. SA 570 tells us how to go about if going concern is expected to be doubtful or they're not able to move forward. And there is one more thing which I have highlighted in one of the slides ahead is about SA 200, the first standard, the objective, overall objective of the independent auditor and doing an audit in compliance with SAs. There, in 2008, when they issued the new preface, first time they have used the term belatedly, professional skepticism. So what is professional skepticism? Is that two ways of putting it in very simple terms. One is that Sir or Sirji is fine. We understand what you're trying to explain. We trust you, but we would still like to verify. Nobody can feel bad about it. There's a biblical term called doubting Thomas, who will trust and believe only if he is able to touch, feel the resurrected Jesus. That's how the story goes. So similarly, in this situation, one has to be a little bit of a doubting Thomas. And professional skepticism is one that. Two is that we do not take documents, explanations, all that for granted. Satyam, I think the SRC chairman mentioned that Satyam was because, our chairman mentioned that it is because They put a lot of reliance on internal evidence than seeking external confirmations. Lot of issues happen. You know, how much the profession suffered a setback and how it was brought back and all that. Therefore, we cannot take documents. It could be fake, forged documents. Documents, situations, explanations for granted. That is professional skepticism. And if you take the spirit of all these 5 COVID-related pronouncements of ICAI, the message is that in this given situation, professional skepticism should stand amplified, stand enhanced. This is very, very important. And 5 publications, look at that, from 27th March to 23rd May. So the committees, central committees, particularly Auditing Accounting Standards Board and AASB, was working overtime to bring out all these very, very important publications, pronouncements during the COVID time. And I'm given to understand by the Central Council members that the online deliberations are much more effective than they all coming to Delhi and sitting together. Sometimes the meeting starts late, somebody is not able to join, the flight is late, okay, or there's a traffic jam, all those things. So we are free of this. And today I'm very happy that we started dot on time, except that, you know, the initial technical introduction and all those things. Otherwise, keeping up the schedule. And Naik sir yesterday very specifically mentioned, Mangalore, we are used to starting programs on time. I appreciate, let us continue that way. So these are about which some of the key aspects of this 5 publications of pronouncements we'll discuss. Now, one more thing is I did mention that auditor's report, new format, I think all of us are used to. But listen here, we have the left-hand side, we have the revised format, the title, the addressee, and straight away we are going to the opinion. Either true and fair or qualified opinion, except for. The terminology is changed from subject to except for the matter specified in the basis for qualified opinion paragraph. The financial statements give a true and fair view. Then we give the basis for opinion. Going concern, as if going concern is now the separate paragraph in the main body of the report. Key audit matters, KAM. We did refer that in one of the earlier slides, where we say the KAM for the time being, key audit matters. I'll briefly explain what it is applicable only for listed companies. But if you read that carefully, it also says, and in situations where the auditor feels that a KAM mention is so much warranted. Key audit matters refer to various matters, very important matters, key matters that come up during an audit for a discussion. But the key question here is, do we really discuss? Are our students interacting with the staff? And let us talk about a medium-sized corporate audit, where we are going to the client, doing it on site. Now it may not be possible, but many places it's possible. My audit team, some of them are working in different client places. Some of them are working online. Work from home has become the new normal. Work from home. IT companies are slowly reducing their workforce. IT parks may see a lot of people might vacate and start. India's largest IT company, TCS, has found that productivity is 15% more in the WFH format. And over the next 4 to 5 years, they're planning to have 75% of their workforce working from home or remote locations. They don't have to come to office. It may be a big boon in places like Mumbai, where you spend in Bangalore, where my brother-in-law works for a company. Is between his residence and office, it takes 1 hour in the morning, and evening they have a huge crowd, 1.5 hours. So 2.5 hours he's sitting in his car. Of course, he's fortunate to have a driver. So otherwise, all these things will contain, and 75% of the workforce of 450,000 employees they have are going to be working from home. These are the new normals. Online meetings, online learning has become the new normal. So that's why we are here together virtually, seeing so many, 136 of us are here together. So not to say from the point here, key audit matters are those matters which are discussed in detail. The auditor has certain concerns, but the management through documents, through explanations, through convincing subsequent events, has been able to explain that to the satisfaction of the auditor that the doubt which you had or the issue which you raised is kind of not very, it's not persisting. One, two is that it doesn't have a huge impact, or that has already been resolved and contained. That is key audit matter. So in the annual reports of 18-19, you would have seen, and I request students and young members to have the habit of downloading annual reports of good listed companies who have a good culture of governance, good culture of financial discipline, good culture of financial reporting and holding out to the public. There you would see that you have the vertical format, a tabular format of key audit matters. Then, of course, we have management responsibility highlighted, auditor's responsibility, other reporting responsibilities like the CARO other reporting requirements, signature, date and place. Something is missing here. Can somebody respond? Unmute and respond. Students should be able to see. Sorry?
It's in a chat box.
It's in the chat box. Let me see what's there in the chat box.
Nothing much as of now, just one.
Okay. Yeah. Okay. Yeah. I have one right answer from Keshava and Bella Korea. You did. That's a correct answer. Thank you. Thank you, Keshava sir. Or is a student? I don't know. Yes. So the UDIN has to be there as part of the auditor's report. UDIN is a big insulation for every one of us. The lot of dubious operators in the market, so-called tax practitioners, with whom I feel we should completely dissociate. They're not professionals. They have this something called, we call it a suitcase practice, the briefcase practice. They carry balance sheets around to get it signed by chartered accountants. That cannot happen. So UDIN is making sure that your signature is not put anywhere without your consent. And it is an OTP control thing. And it should be only your phone number which you give to the institute in the UDIN portal, and make sure that you get this. And before any auditor's report is printed out, make sure that UDIN is generated. It is electronically tabulated, but still it would be better to have an Excel tabulation on top of that in our offices. That is something which is very important. So this is the new format of the auditor's report given as an appendix to SA 700. Sorry. Quickly, since we have large number of students too, many of us feel that audit has over a period of time got diluted. Audit got diluted with a lot of audit considerations taking a backseat. And also compilation is a key thing. When you ask the students sometimes, how far has the audit progressed? They said almost over. Financial statements have been drawn up. I hope many of you have the similar experience. We might need to help smaller clients. Why smaller clients? Even listed companies, some of our listed company clients, the corporate accountants have not been able to generate a fully compliant, Schedule 3 compliant, accounting standard compliant, if you are listed, Ind AS compliant balance sheet with the proper disclosures, even the format. So most of them think that once the trial balance is ready, this rest is to be done by the auditor. We may need to help them, but then strictly speaking, we are not supposed to. It is the management's job. But then we may help them, but audit considerations can never be taken to the backseat. It should remain on the forefront. So just let us do some introspection on very elementary aspects. Opening balance checking. Are we doing it regularly? No, I'm not just talking about the ticking from the old schedules to this year's financial statements. And today, some of us are not able to do the ticking because we do not take printouts. Fine enough. Electronically, we can check. There is no problem. But are we doing it? If you're not doing it, we should do it. Particularly new audits. We got one new corporate client this year. The auditor resigned and then we were appointed. And we just started doing the opening balance checking, and there's a ledger account called a land. I'm talking very basic land, which had a debit balance of about 12 crores. So what do we ask for? We ask for the breakup of that, which is not there in the fixed assets register. So we ask for a breakup of that, which are the properties, which are the survey numbers, a tabulation of it. We got it with some delay. Then we ask for the original title deeds because we are doing this for the first time. Original title deed is to satisfy ourselves. Plus, you should know, students should always take time, younger members should take time to read the auditor's report once fully. Otherwise, it's a copy paste from the previous year. It cannot happen. It should not be. In Caro, one of the first reporting points is whether immovable properties in the balance sheet of the company are held in the name of the company. So you have to make sure. We are yet to get those documents from the company. They're saying that it has been given to the village office for change of name, etc. But it has purchase had happened in 1718. We will not go forward without getting those details. These are things which we should ask. Students should communicate expressively, very much be responsive and expressively communicate with the management at various levels. And to my dear colleagues, we should meet the top management always. Managing director, director of finance. Our level is different. We should not confine to the accountant's level or finance manager's level. We are part of the audit committee. We should essentially attend audit committee meetings and possible board meetings. And we are mandatorily required to attend the AGMs. But then that we are not able to do for whatever reason. Second is internal control evaluation and communicating those findings to the management. The term used is not management, TCWG. Those charged with governance. Vouching. Are you all doing this or just compiling financial statements? Checking documents, the approvals, the relevance of transactions. All that is very, very important. Ledger analysis. Our senior members, some of them in the days of manual accounting, used to get photocopies of some of the major ledger accounts with the closing balance duly inked. And now we feel that that's very old-fashioned. But let me take two statements here. One by the respected Y.H. Malagam sir, past president of our institute. He said, talking too much about technology, we are leaving out details of transactions. A very relevant statement for all times. If it's a computer printout, we think that it is divine, but can come infested with everything, including COVID. One has to be careful. And my dear friend Ganesh Balakrishnan, who is the managing partner of a multinational firm in Hyderabad, he says that Jomon, there's a lot of charm in what our seniors did in taking all these copies. We learn from experience that many of the things which are told to us, explained to us, presented to us, cannot be taken, or rather can be taken only with a pinch of salt. Verification of assets and liabilities. How many of us do this? Verification of documents. Analytical review. Analytical review is something very, very important. Ratio analysis. We have a separate standard on this. Trend analysis, ratio analysis, with the knowledge of business which we have, we should do. Comparing financial statements with books of account. Do we get a final trial balance duly signed by a finance manager, the final one, after passing all the entries? Sometimes during the audit, you see pass a lot of journal entries. And the signed trial balance should be part of your audit documentation. Accounting standard compliance. We are coming to that a little later. 76% non-compliances are in the form of non-compliance accounting standards. I think I did mention this last year. 3 years back, a friend of mine practicing chartered accountant in Bangalore sent me a set of financial statements because that company, which is in education space, was scouting for foreign investment. They had very good profitability and there were some private equity investors who were interested. So my friend said, please go through this balance sheet. the financial statements and see whether they are presentable. I use the term presentable in layman's terms. So we went through and found shockingly that accounting standard compliance was dismally poor. This company had a lot of timing differences in depreciation, all that. There was no reference to AS22, deferred taxation. EPS is not disclosed. I'm giving simple examples, so many of them. So many non-compliance were. Intangible assets treatment was absolutely wrong. I don't think this company or its auditor knew anything about AS26 on intangible assets. People still think that preliminary expenses have to be written off over a period of 5 years, which is not the case. That is because you have 35D, Section 35D under the Income Tax Act. But under accounting standards, preliminary expenses are to be written off in the year in which they are incurred. Because AS26 says it does not meet recognition criteria. Schedule 3 compliance information for notes we have to gather. Schedule 3, make sure that all the disclosures are made. CARO points, informed reporting we have to do.
Yes, sir.
Yeah. Moving on. Now quickly run through accounting standards. We have 29 minus 2 accounting standards as of now. I cannot say 27 because they have not been renumbered. AS 6 on depreciation was withdrawn in 2016. I did make a mention about that. It is now merged with AS 10. AS 8 research and development has long back been merged with AS 26 on intangible assets, research and development. No separate standard. So in the result, we have 29 minus 2 accounting standards will continue to apply. They came into existence with the company's accounting standards rules 2006. I don't know how many of us have fully gone through that. Some of us, since being in academics, we are forced to go through that, update on a regular basis. That is the biggest challenge today the profession is facing. We are in such a dynamic environment. We need to really update. So sole practitioners are finding it difficult because they have to do everything. Larger firms also, specialization is not happening. Everyone seems to be doing everything. I think that should stop. Specialization has to happen. In my firm, in a small way, I have tried and found it with a lot of success. Is it a client-wise allocation or area-wise allocation? I think eventually we should all move to area-wise allocation. We have a GST partner. I haven't got into GST seriously. Just the basics maybe I know. I'm just sharing a personal note. I've not gone to income tax office for the last 8 years, except for a high stake case which for the jurisdiction went to Bangalore, 197 deduction. That's the deduction. Because I have partners who are specializing in this. So the firm collectively possesses expertise, and hopefully that's what we think, and we are still trying to improve. The baseline of our firm, you can see on the bottom of the slide. Bigger, better, bolder. This is what all of us should aspire. In times of COVID, we need to show restraint, no doubt about it. We have to have the resilience to survive and move forward. And most importantly, I would say that we should have a firm resolve that things will change. Optimism should come to the forefront and say that things will change. Everything is going to be normal. And the post-COVID scenario will be very, very sunshine days for the profession. It will bring in new opportunities. I should gear up. This is the learning time. Online learning, best time to learn. So the company's accounting standards amendment rule 2016 made a lot of changes. We'll see as we go by. And the point here is that in 2006, as early as 2006, the company's accounting standards rule defined the small and medium companies for the purpose of saying that some of the new generation standards, for example, accounting standard 17, segment reporting is not applicable for them. Cash flow is not applicable for them, but cash flow now it is under the Companies Act. We have already discussed. Certain standards have only very limited applicability. Non-applicability or relaxations, and a small and medium company is defined to be a company which meets all the following conditions. It's not a listed company. It's not a bank, financial institution, or insurance company. Its turnover does not exceed 50 crores in the previous year. So for 1920 financial year, to decide on the applicability, we look at the previous year. 1819, if did the turnover exceed 50 crores? If yes, it is not a small and medium company. It is a non-SMC, non-SMC. If you are a non-SMC, all the accounting standards will apply in its entirety, in toto. All accounting standards will apply in toto. That's the cardinal principle. If you are an SMC, then we have limitations, we have relaxations, we'll come to that. Its borrowings does not exceed 10 crores at any time during the previous year, again previous year. But look at the last bullet point. This has to be taken, seen carefully, referred carefully. It is not a holding or subsidiary of a non-SMC. So our client may be a small private limited company in Mangalore or Cochin, but it is a subsidiary of a large holding company in Mumbai or Bangalore. Then even for the small company, which is our client in Bangalore, it becomes a non-SMC because it is a baby or rather subsidiary of a subsidiary or holding. The other way is also possible. We are a small holding company, like an investment company. The baby has grown bigger than the dad, and therefore the subsidiary, therefore that will also apply. If all these conditions are satisfied, you are defined, the company is an SMC. And if the company is an SMC, in the notes on accounts, we have to make a mention in this beginning point of significant accounting policies. The company is a small and medium company as defined in Accounting Companies Accounting Standards Rules 2006, and accordingly has complied with accounting standards only to the extent applicable to SMCs. So the reader is given an information. Why is that segment reporting is not made? Is because it is an SMC. I'm not required to. I'm a small company, medium company. I hope the point is clear. Moving forward, this is something which some of us have not got sight of or taken note of. Companies Accounting Standards Amendment Rules 2016, which came on 31/3/16, applicable from financial year 16-17. So 3 financial years, this is the 4th financial year to which these amendments are applicable. Quickly, we will run through the standards now. Accounting policy disclosure, IAS 1, very poor disclosures. We still see a one-pager notes on accounts. My suggestion is that to prepare sample notes with reference to a good annual report. So one-time exercise. And you can, if the PDF can be converted, you don't have to reinvent the wheel. Therefore, with that, we can do that. IAS 2, let us know that it recognizes only absorption costing, which means that in the valuation of finished goods and work in progress in manufacturing entities, indirect production overhead will also be apportioned in arriving at the cost. As far as cost formulae are concerned, it allows only FIFO and weighted average cost. Allows exclusive method of GST only. Earlier we used to say VAT, ED, excise duty and all that. Exclusive method of GST is if you're not taking input credit, it does not apply. If you're taking input credit for inventory valuation, you should take only the purchase cost. For example, we pass an accounting entry, purchase account debtor 100, GST input credit 18, to suppliers account 118. So for inventory valuation, it is not the 118, it is only 100 that we would take. That is what's called exclusive method of dealing with GST. Here, the new amendment is, if you are a manufacturer and a trader, manufactured goods should be shown as work in progress, finished goods. Trading goods should be shown as stock in trade. That's a presentation difference. IAS 4, it's a very important standard now in the COVID scenario. Subsequent events. What is IAS 4? It is unfortunately still named as contingencies and events occurring after the balance sheet date. But contingencies have been pulled out of this and planted in IAS 29. Provisions, contingent liabilities and contingent assets. Now the standard IAS 4 deals only with subsequent events occurring after the balance sheet date. Now we went into a lockdown this year at the end of March. And a lot of developments have happened. We are now doing the audit. For example, if you are a pharma company, many of your raw materials, many of your finished products would have expired because the date is there, expiry date is there. If we had perishable goods or like fruit pulp and things like that, if anything of that sort, probably it would have gone putrid and sour. A lot of them were deteriorated, melted away, deteriorated in quality, not saleable, not usable. Some of the debtors which you had accounted at 31st March would have disappeared, would have vanished because there's no business. Very, very unfortunate developments are happening. So these are all to be taken note of while finalizing 1920. Assets would have substantially impaired in value. All those things have to be taken care of. And this is about dividend. 1920, that is from 18-19 financial year. I'm sorry, 17-18 financial year. Proposed dividend should not be accounted for. Dividend is accounted only, final dividend is accounted only in the year in which it is paid. So for 1920, for example, the board meeting today finalizes and the accounts are getting finalized and board recommends. I repeat, the board recommends a dividend of, let's say, 20% for the financial 1920. We will not go back to 31st March and provide for it. Consequently, provision for CDT is also not required. Corporate dividend tax or dividend distribution tax, DDT, as one would call it. This is a new thing, and therefore this will be accounted for only in 2021 when it is finally declared in the AGM and paid. But we will make a reference in the notes on accounts. Notes, not board report. In the notes on accounts, we should insist that the management puts a note, or we are preparing it, let us put it. AS 6, I did mention, it is fully withdrawn. That was on depreciation. AS 7, accounting for construction contracts, recognizes percentage of completion method only. No more completed contract method. AS 8 was withdrawn long back, R&D. So 2 are withdrawn fully in red letters, you can see. That is why I said 29 minus 2 as on date. AS 10, name change to fixed assets, from fixed assets to property, plant and equipment. PPE briefly, depreciation provisions brought in here, paras 40 to 60. Paras dealing with patent designs, etc. withdrawn because they are all intangible assets. We have a self-contained separate standard on intangible assets. Sorry, AS 26. This I think we can skip for the sake of time. AS 11, all foreign exchange fluctuation effects are to be expensed or taken to credit. It will not be capitalized. I'm giving this example of our client importing machinery from US for $100,000. And today the dollar rate, let's say at the time of import, was 68 rupees. So we pass an entry, fixed assets debtor, and he says that he's giving deferred credit. We need to pay him only after 1 year. So let's say we made this purchase on 28th of December. Transaction date, we pass an entry, fixed assets debtor, 68 lakhs to deferred credit or the overseas supplier, 68 lakhs. On 31st March, what was the rate? Now it is gone up to 76 and now it's around 73. So for that 68 has become 73, let's say, as on 31st March. There is a 5 rupee difference. Naturally, the liability of 68 lakhs stands increased to 73 lakhs. Where will we debit this 5 lakhs? Now the revised standard says it should be debited to P&L account as foreign exchange rate fluctuation. Though that is accounting, that is happening on account of a capital account transaction. Earlier, we used to capitalize that, add that to the cost of the asset, then depreciate it over the remaining useful life of the asset prospectively. That is not allowed, so that has to be expensed. AS 13, we can 15, yes. Actuarial valuation is mandatory. For all companies, big and small, actuarial valuation is mandatory, without which if you do, it is non-compliant with AS 15. Funding is not mandatory. we calculate, do an actual valuation and debit to P&L account and create a provision for gratuity is fine. But sensible organizations think that it should also be funded. So funding is joining a group gratuity scheme of, let's say, LIC. Some of our clients are there. And if you are funded, then what happens is every year end you should assess or reassess, they will give the value of plan assets. The terminology used in the standard, the value of plan assets. The money which we have given, they have invested. And 31st March, most of the cases we would have seen that the value of plan assets have come down. That reduction also will have to be provided for in the P&L account. So in addition to the accruing liability, incremental liability every year, because employees are continuing, employees are gaining one more year of experience and eligibility for gratuity, there is a contribution which we make, and that's a provision which we make on actuarial valuation, which also if you are part of LIC, they will give you, or group gratuity, they will give you. Now, in addition to that, this reduction in the value of plan assets should also be provided. Now, one more thing. Take the case of, I'm sure in Mangalore, in tourism industry, we have a lot of things in common. Kerala, Mangalore, the entire Konkan coast areas, we have a lot of resorts. Now, these resorts, some of them may close down. Some of them have already retrenched employees provisionally. But if they're not coming back, if they've completed years of service, if Payment of Gratuity Act is applicable, all those people will have to be paid their gratuities. That is actually accrued as on 31st March 2020, because they have been retrenched, they may not be taken back. They can go to court and claim it. So that we have to take into account. That's one of the things which is very important from this year's finalization point of view. AS16, as I hope all of you are clear, I think we need to go faster, and if time permits, we'll come back. AS21, consolidated financial statements. I think I'll quickly explain then, referring to the slide. The AS21 consolidated financial statements, the issue came when Companies Act 2013 was introduced. It said financial statements, including consolidated financial statements, should be filed with the Registrar of Companies every year. And unfortunately, they said subsidiaries would include associates and joint ventures. Subsidiaries would include associates and joint ventures. So we had a confusion. How do we consolidate an associate? How do we consolidate joint venture? There was some confusion in there. That is clarified by virtue of what is mentioned in this year. The reading may be confusing, so I'm making it easy. If you have an associate, comply with AS23. Good enough. AS23 also talks about equity method of accounting, which is not the cost method, equity method, one is reminded of. If you have a joint venture, comply with AS27. Don't get worked up, don't hurry, don't confuse yourself in consolidating joint ventures or associates. AS23, accounting for investments in associates in consolidated financial statements. Accounting for the financial interest in joint ventures, AS27. Comply, that's enough. AS22 virtual certainty has been clarified. Okay, what is this virtual certainty? Are you all there? Is it going okay, Yashaswini?
Yes.
Yes, sir. Yes, sir.
Yes, sir. Yeah.
Yes.
The virtual certainty, I need to take 2 minutes here. It is relating to AS22. AS22 talks about deferred taxation. Deferred tax assets can be carried forward if there is reasonable certainty about future profits. Very, very important point to be noted in the COVID scenario. Deferred tax assets can be carried forward, should be recognized and can be carried forward if there is reasonable certainty about virtual profits. But if deferred tax assets are represented by unabsorbed losses and unabsorbed depreciation, it should be carried forward only if there is virtual certainty. Earlier, reasonable certainty, but DTA represented by unabsorbed depreciation losses can be carried forward only if there is virtual certainty about future profits. So we started doing research. What is virtual certainty? So people said, I will make a very rosy business plan. My company has been making losses for 10 years. So there's a huge accumulated depreciation and accumulated losses to be carried forward. I will make a business plan. I will take the turnover. I never achieved a turnover of 5 crores. Next year, I'll project a turnover of 25 crores. Year after next 50 crores. Make a profit, declare a dividend, etc., etc. So on the story goes. And based on that so-called rosy business plan, I say that I will have future profits and recognize all these deferred tax assets out of the unabsorbed loss and depreciation. What happens? The balance sheet looks healthier. Earlier accumulated loss at the bottommost line of the balance sheet, is it not? Now it is a bracketed item from the reserves. So if there are huge losses, your reserves will either be minus or will be reduced substantially because of that bracketing or reduction from the reserves and surplus. So once you recognize this deferred tax assets and liability, it gets shifted from that to DTA, which is in the middle part of your application of funds. Separate line item in the balance sheet. The virtual certainty clarification says that this is unhealthy, you should not do it. Virtual certainty can be based on reliable, conclusive evidence only. You and I working on an Excel sheet, not knowing the future clearly, or just based on very high expected, unrealistic, utopian expectations of the management should not establish virtual certainty. I hope the point is clear. And they have given this example. Where do you have reliable, conclusive evidence? This company, I said, has been limping, has not been able to take off 2 crores, 3 crores with huge investments. But suddenly you get somebody recognizes their quality in your product and say with some minor alteration, a foreign company or a buyer from, let's say, we are sitting in Mangalore or Cochin, a company from Mumbai is saying that, Are Baba, your product, thoda amen karo, thoda improve karo. I will take 1,000 units from you every month. This is a very good product. And we get into an agreement. And that kind of agreements can be relied upon as reliable, conclusive evidence. AS 26, I did make a mention earlier, recognition criteria concept. An outlay on an intangible should be recognized only if it is bringing future benefits. And also very important that you have the intention to commercialize that. You may be a research guy. You would have developed a product which you would keep it in your office showcase or showcase in the house saying that is something I've developed. It's a wonder product. Then somebody would say, why don't you commercialize that? No, it is only for my satisfaction I did it. If a company does that, all the expenditure has to be expensed because it is not going to have any benefits flowing into the company out of that invention. That is recognition criteria. And given that there is no question of deferred revenue expenditure now, preliminary expenses, all those concepts are not there. They are dead and gone. They have to be written off in the year in which they are incurred. And that is why the miscellaneous expenditure head has also disappeared from the balance sheet to the extent not written off or adjusted. It should be written off in the year in which they are incurred. So preliminary expenses, what happens again, because we have AS 22 also in this current slide. Preliminary expenses subject to the monetary ceilings in 35D of the Income Tax Act. We are able to write off only 1/5. Whereas in the accounting, in the P&L of the company, we are writing off 100%. So that balance 80% will result in a DTA because tax benefits are yet to be claimed. You have written off in the P&L account. So that is DTA it will result in. I hope you are clear. That is how we are working. And one more thing, since members and students are sitting together, I think there's a lot of need for mentoring the students, weekly meetings. So weekly may not be possible now. Online meetings can happen. At least fortnightly meetings, interaction with the students. We do some audios. The other day I did one for cash flow statement for our students. It was recorded and it was sent to the students. In the students group it was put. So what is the importance of cash flow statements? The message was don't do it mechanically because Excel is capable of bringing in figures. If you tabulate 3 years balance sheet and then do a proper reference, your cash flow will automatically tally. But to understand the concept, why cash flow is important, I gave 5 to 7 minutes audio recorded and to shared with the students. It is found to be useful. So then they say that, okay, income, cash flow from operating activities. What is the meaning of that? Investing activities and then financing activities. explained threadbare. So the student next time, when he or she prepares a balance sheet, cash flow statement, the above will also be coming under phase 2. Again, Nayaxa's client, the private limited company, is in Mangalore. That's a small company, which is only, let's say, 10 crores of net worth. And it's a subsidiary of a Mumbai company, which has got 350 crores of net worth. Then this small company also in Mangalore or Cochin will have to be moving to the Ind AS regime. That is a key point. So when we say that unlisted companies net worth of 250 crore or more are under Ind AS, its meaning is that the other companies which are below this have to comply with the accounting standards we discussed, the original accounting standards which we have lived with. And today, Ind AS is part of the syllabus also. Final, they are asking questions from Ind AS. Intermediate, I don't know to what extent. I think there's an introduction there. But for 1920, most of the small companies of less than 250 crores net worth, Ind AS is not applicable. We will continue to be under the accounting standards regime. That is disclosure of accounting policies, AS 1 to AS 29, provisions, contingent liabilities, and contingent assets. This is just since I advocated or rather urged you to take downloads of listed companies. This is how Infosys has, in the first year of Ind AS transition, prepared their notes on accounts. I will read from the second paragraph. The company has adopted all the Ind AS standards and the adoption was carried out in accordance with Ind AS 101, first time adoption of Indian accounting standards. The transition was carried out from Indian accounting principles generally accepted in India as prescribed under section 133 of the Act, read with Rule 7 of the Companies Accounts Rules 2014. And they have called it IGAP. What is IGAP? Indian Generally Accepted Accounting Principles, which was the previous gap. Reconciliations and descriptions to the effect of the transition have been summarized in Note 2.1. This is about depreciation. So when I talked about Schedule 2 and the indicative useful lives given in there, a question arises as to whether can I adopt a different useful life. And there, if you see Schedule 2, there is an arbitrary 5% residual value. Can I say my products or my machines or my equipments, my property, plant and equipment will have a different 10% residual value? Or sometimes I say that after 5 years, this will have to be scrapped. I'm not going to get any residual value. Yes, it is possible. It is allowed. That is how Infosys very brilliantly applied this provision. Property, plant and equipment are stated at cost less accumulated depreciation and impairment, if any. Costs directly attributable to acquisition are capitalized until the property, plant and equipment are ready for use as intended by the management. The company depreciates property, plant and equipment over their estimated useful lives using straight line method. The estimated useful life of assets are as follows. In that, if you see, there is a footnote for building, plant and machinery, computer equipment and furniture and fixtures and vehicles. Only office equipment is in line with Schedule 2. All other, they have adopted different rates. And what is the explanation? As I mentioned earlier, the management cannot decide just like that. They should get a technical expertise value, expert technical valuation. Based on technical evaluation, the management believes that the useful lives as given above best represent the period over which the management expects to use these assets. Hence, the useful life of these assets is different from the useful life prescribed in Part C of Schedule 2 of the Companies Act 2030. Verbatim, like a textbook case, they have translated this. Depreciation methods, useful lives, and residual values are reviewed periodically, including at each financial year. This is how disclosures have to happen. Let us compare what we are doing with this, and then if we need to improve, let us improve. Cash flow statement. I did mention all companies except small dormant and OPCs must prepare cash flow statements. Now, startups are also exempted. Startups are defined under the industrial policy, DIPP, this thing, audited to report on cash flow statements too. Depreciation, Schedule 2 with a detailed list of assets and useful lives. Residual value % fixed arbitrarily at 5%. This can be different. For intangible assets, accounting standard 26 to apply. Depreciation rates are not mentioned there. AS 26 to apply. What is the cardinal principle in AS 26? In the Indian context, they say, or they are telling us that there is a rebuttable presumption that the useful life of an intangible asset will not exceed 10 years. If it is computer software, web design course, etc., then it is not 10 years, it is 5 years. But the presumption can be rebutted. For example, when I travel from here to Mangalore by road in Kerala, we have a lot of railway overbridges between Calicut and Kannur. Earlier, we all had to wait at the railway cross. Now we fly over. They are all collecting toll. Assume that the toll bids for one of those bridges is given for 15 years for 1 crore of rupees. The fact that the agreement is for a period of 15 years, we are able to break the 10-year barrier, the rebuttable presumption that the useful life, or rather the utility of the amount of premium I paid for 1 crore will extend beyond 10 years because the agreement itself is for 15 years. So I can write off that under straight line method that 1 crore or a period of 15 years need not be for 10 years. That is the point here. Auditing standards, I did mention earlier, they are mandatory, part of the statute book under the Companies Act. One has to be extremely careful in dealing with this. Total compliance to be ensured, a culture change is required. Let me ask a few questions here. SA 210, Nayak sir rightly mentioned, letter of terms of audit engagement, agreeing on terms of audit engagement. That is the precise name of the standard. Do we have the practice of getting a letter of engagement from the client before starting an audit? Appointment letter is very, very important. In the last less than 2 months, I had 2 calls, 2 cases where the audit was accepted without proper appointment, without communicating with the previous auditor. Both, one came for mediation, one came from the outgoing auditor saying that this boy is pretending to be not knowing anything, is a youngster, so I am going to take him to the DC. Here, before getting into terms of engagement, let me also say that in the Companies Act 2013 today, the auditor is appointed for 5 years and not for 1 year. He cannot be removed before that 5 years without the prior permission of the central government. But many of us still think that, and the need for ratifying the appointment in every AGM has been done away with. The first auditor, of course, appointed by the board, his term expires at the conclusion of the first AGM. After that, it's for a period of 5 years. If there is some problem with the auditor, the management says that you are appointed, we don't want to continue with that fellow. This we have to be careful. So SA 210 added with that is the getting a proper letter of engagement. And today it's also very important that we get the fees fixed up upfront than at the end of the audit. When we finalize the audit, we say we want to make a provision for audit fees. No, it should be agreed upon. It should be part of the letter of the engagement letter. We call it LOE in our office, letter of engagement. We must get it, SA 210. Nayak sir also mentioned about SA 230. Documentation. How good is our documentation? That's where I said we should, and KYC today is very, very important. Know your client. You should have physically interacted with that particular client and taken KYC. This is very important. That's why the briefcase practice has to be killed, stopped. We insist on how much or big the client is in our office. Maybe if it's a senior person, the other day we had a medical services company. It's a very famous doctor who's a Padma Awadi. We met him twice, and the third meeting we said it has to be in our office. We invited him to office, gave him a good cup of coffee, as in Kerala and Mangalore, some cashews. We had a nice chat. He was happy, impressed with the office. That is also, offices are also selling points today. And Mangalore, I have seen, complimenting you, one of the best offices in the southern region I have seen in Mangalore. When you have invested a lot of money in a lot of time, thought, and money in the offices. So many of them are very, very presentable. It welcomes you. It has an air of goodness in it, air of good ambience in it. But 90% of our fellow members, unfortunately to say, work under suboptimal conditions. We spend a lot of money on our office, residences, luxury cars, but office where we spend maximum waking time of ours in the best days of our life, it is still suboptimal. Sometimes you have to search for people amongst files. That has to change. So back to SA 230 documentation. Very important that we have evidence to prove that the audits have been done in accordance with auditing standards. We have collected sufficient appropriate evidence. SA 500, SA 300 audit planning. We have planned the audit properly. We have directed the students properly, written out notes properly. And our audit notes need not be in hard copy now. The other day I asked for, since I finished my chairmanship, I'm back to doing some audits here. Very few audits I've taken up, other partners are doing. So I asked for ledger scrutiny notes. The student said, she said, sir, it's already in the client folder. Doesn't matter. I'll bring she brought a laptop and just showed it to me. I can see it in it's because the network LAN is there. I can see it in the client folder. LS notes are in Excel. We don't have to keep printout of that. Slowly, hard copies will disappear, but we should have proper backup. We need to keep it for a longer time now. Audit notes are to be kept, and therefore AS 230 is very important. Let me move over quickly to some of the practice-based standards. SA 300 audit planning. The action point or the question which I would like to ask you is, do you have an audit program? For small companies, let's say all of us have that 1 lakh capital companies. They started and one guy went abroad and the other guy they are pulling on. Sometimes the company has not filed returns. Audit fees they will not give, but collect it upfront. I'm talking about larger audits where all these audit processes I mentioned earlier are relevant. Do we have an audit program? Very important. If there is a disciplinary action against you or if NFRA wants to come against you, then you have the proof that the audit has been attended properly. Appointment as the thing, engagement letter, and all these things. Very, very important. Audit program emanates out of SA 300. Do have an audit program. If you don't have one, just Google up and you will get it. Plethora of formats you will get. You have to customize that. Again, coming to audit program, there is no fit-all model of an audit program. What you are using for a manufacturing or a cashew processing company there cannot be used for a stockbroking company. These are very basic things. Or service company, you are doing you see, we have a client here, just giving an example. There are 400 MSc math teachers sitting in Cochin. Now most of them are working from home, taking tuition for students in the US. For them, for NBFCs, for manufacturing companies, for trading companies, for IT companies who are developing software, etc., different kinds of customized. There has to be certain general points. On top of that, that company-specific or industry-specific items have to be there in the audit program, SA 300. SA 315 is a very, very important standard, which is referred to in the COVID publications of the institute. Understanding an entity, assessing audit risk by understanding the entity and its environment. Not verbatim, but this is the... So knowledge of business is very important. In our audit program, one point is prepare a general note on the business of the company. Prepare a general note on the business of the company. The understanding of the business models, the business dynamics, and businesses will change. A housing finance company today, knowing that real estate is not going to do great, might shift to vehicle financing. Vehicle sales are slowly picking up. In April 2020, India did not sell a single vehicle. Now they are giving a lot of offers. No upfront payment. You can start paying after 3 months. Very relaxed DMI. So vehicle sales might pick up. As the economy picks up, this will also pick up. So this client of ours, who is an NBFC, for example, wants to start alongside housing finance, a new division of, or started rather, vehicle financing also, or trade finance. Naturally, we should know about it. What are the business dynamics there? One has to understand. So that SA 315 is also important. Only then, with that understanding, that you can assess the audit risk. The knowledge of business is 3 verticals to that. Entity specific knowledge. Your company is ABC Cashew Exports. Entity specific knowledge about ABC Cashew Exports. 2 is about the cashew industry. Industry specific knowledge. And the 3rd position is the general economic scenario. So very important, so very relevant in the given context, that shipments may not be easy, orders may have come down, meetings are not happening, so consumption is down, so it can happen that way. That understanding has to be there. It is based on that that you evaluate the audit risk. These are all other specific reporting requirements, but in different color I have mentioned there. Internal financial control reporting has been relaxed. Small companies with turnover of less than 50 crores and borrowing of less than 25 crores need not do IFC reporting, provided they are fully compliant with the provisions of the Companies Act. They should have filed AOC 4 on time. They should have filed MGT 7. MGT 7 is the annual return. AOC 4 is the filing of the annual account with the ROC. If that is there, then we are exempted from, private companies are exempted from internal financial control reporting. Otherwise, we need to add that 3-4 page bulky report to the auditor's report. New reporting requirements, most of us are familiar with this. Impact of pending litigations on financial position. Before that, auditing standards, one more thing is SA 500 is evidence. 501 is audit evidence, additional considerations for specific items. I need to take 2 minutes here. Recently, we had this experience. A friend of mine in Rotary, he is also a past president. He called up and asked me, Jomon, can you suggest an audit firm for doing physical verification of inventory in my factory, which is in an industrial area near Cochin. This company is a private limited company taken over by a larger group, and they are planning an IPO. They are audited by SR Batley Boy from Pune. And since they are not able to travel, they wanted to engage a local firm. Then in between he asked, Jomon, I don't know whether it is too small for you. I would like you to do it if you can. And then we looked at the assignment. It is not too small. We said, we'll do it. It's an experience. So we started getting instructions. We got appointment letter. Though he's my friend, over the phone, he said, I insisted on he sending us an appointment letter. And then the communication started with the Pune firm to us. My partner was in charge of getting a lot of communications by email, calls, reporting formats. And they had selected 15 items of samples from raw materials and finished goods. In addition to that, another 10 items they wanted us to randomly pick. And the best part of it, they referred to SA 501, the framework. Why are they asking for this is, SA 501 says that one of the items in there is, the auditor should be physically present. Or if he cannot be physically present, depute someone responsible with domain knowledge and get the supervise the physical verification of stock. Are we doing it? Just accepting a stock statement. And if we take a printout from the tally, we'll see a lot of negative items. Because there are issues without purchases. Some issues have not been recorded. So there's an accumulation of stock, plus minus, the story goes. But best part of it is, the instructions included saying that once you go to the factory, meet the people, take a selfie and send it to us. That's a starting point. Making sure that we are actually present there. Then the entire process was on video and somebody was watching it from Pune. Look at the way things are coordinated. That is one way of absolute compliance with SA 501. Naik sir did mention SA 505, external confirmations, bank confirmations, confirmation of documents held and all that. One important standard is SA 580, written representations. We should obtain all that is discussed during the management, all relevant explanations, because oral explanations can be volatile. They may later say that, who told you? I don't remember having said this. Get it in writing. Written representations. We call it LOR in our office, letter of representation in our office. Must insist on that. So these are moving on, important responsibilities. Yeah. New format of the auditor's report I did mention, 700. 705 is about modifications in an auditor's report. How to qualify, how to issue an adverse opinion, how to issue a disclaimer is all mentioned in 705. 706 is emphasis of matter paragraph. You want to highlight something, but it is not as grave as to qualify a report. Therefore, you still have another paragraph, emphasis of matter, which you conclude by saying that our opinion in this matter is not qualified. Still, we want to highlight, so we are making it part of the auditor's report. 701, I did mention key audit matters. As of now, applicable only for listed companies. Professional skepticism, other essays, we have seen what it is. Very important as we go by. This is there. ICDS, 10 standards, applies to business income and income from other sources to be complied with while computing IT. Because we are complying with ICDS, there will not be an accounting entry, but then it can have a change. It can make a difference in the provision for income tax. Current as well as deferred, so one has to be careful in dealing with this. Institute has come out with a lot of guiding pronouncements. Guidance note on fraud reporting, guidance report 143 F&H, application guidance on depreciation. When that came, we had some confusion. Guidance note on CARO 2016, implementation guidance on SS 700, 705 and 706, IG on SS 701 key audit matters and so on. So these are the reference points. I'm leaving the slide deck with the branch, so you can refer this wherever required. And also we have seen the important COVID-related pronouncements of ICAI. Going concern, one has to be careful. Physical inventory verification, I like what they did. So this firm wanted us to do this physical verification, and they are under SAP, so track back and ensure they arrive at the stock of 31st March. Huge documentation, multiple tabular reports we have to give. And we knowing that this will be the format, we quoted a fees which is very good for 1 day's work, and it was immediately paid. We told them, one-time assignment, no credit. Friendship apart, you should be paying our bill immediately. He agreed. As a cash-rich company, so did not have a problem. We could send the bill and got the payment the very next day. It's very important. One of the COVID lessons, while we are in the COVID publications of the ICAI, what are the COVID lessons chartered accountants should learn? One is, when the lockdown was declared, 2 days from then, the partners met on Zoom and discussed whether do we have the resource to pull on for 3 months. The answer was kind of yes. And then we looked at, do we have huge receivables? If we give an undue credit, collecting it will be difficult, very, very difficult now. When the going was good, we did not ask. How do you think we can ask now? Pura business band hai, we cannot ask. So we are putting ourselves to vulnerable situations. And the senior chartered accountant from Cochin, who had given me a lot of support for the conference and all that, he said, Joman, last year what happened was the tax audits, something or the other, I was traveling. We did the entire tax audit billing only in the month of February. 1890 financial year, 1920 assessment year tax audits were billed only in February, end of February. What can happen? All that are lying as receivables in his books of accounts. That's a very, very unfortunate situation. In our office, we insist on giving timely service. The moment the service is rendered alongside the auditor's report and all that thing, the bill will go. And we do not give credit. Our outstanding was less than 3% of the annual billing as on 31st March. Because we had this policy of collection. New clients particularly, you tell them, why should we give credit? I'm talking this from this point of view of going concern, considerations, and who's going to benefit? Ours is the only industry which gives a free 12 months credit. Subsequent event, I did mention, discuss that threadbare with the management, and only then that there will be light on it. Take every explanation, unfortunate to say, The skepticism has to be amplified. It should be at the forefront. You cannot today take things as if everything is fine and normal. Everything has been disturbed. So one has to take that situation, approach that situation with no issues, with some amount of suspicion. Inventory measurement considerations coming out of those publications. Write down of inventories to NRV due to reduced movement, decline in selling prices, inventory obsolescence due to lower expected sales. Normal production capacity to be reviewed for allocation of fixed production overheads. That's very important. Impairment consideration, we can go fast. Revenue. Entities may have postponed recognition of revenue due to significant uncertainty of collection in view of COVID impact, COVID-19. Going concern. Disclosure of accounting policies, yes. Contingencies and events occurring after the balance sheet date has to be considered in assessing SA 570, going concern has to be referred. The impact of COVID-19 after the balance sheet date should be considered. Useful life and residual life of PPE needs revision, may be revision. Reviewed considering the COVID impact. Accounting for taxes on income. I did mention about the virtual certainty and all that. That may be of doubt. Entities with DTA should reassess forecast profits and recoverability of DTA in accordance with IAS 22, considering the additional uncertainty arising from COVID-19. That is a doubt. Then this deferred tax asset should be written down or maybe written off also. So those are the important points, friends. Quickly, before I conclude, one slide on certain things which I think is very relevant as we are together. This is on empowerment and bringing out a little bit of change if we need to. So we need to substantially leverage more on technology. Today, if you do not have a cloud server, you have a problem of accessing data. Data security concerns are there, but still, we should improve infrastructure. I did compliment Mangalore and its members for having very good offices. And technology, we need to substantially leverage more on. Let us have good processes, standards and auditing, comply with that. I will have a letter of engagement. I will have written representations to the extent required. I will do an audit with the guidance of an audit program, so on and so forth, the story goes. Good people. Today, many of the firms are aging. With due respect to the senior colleagues, I would only request them that have a blend of youngsters. Your wisdom, your experience has to be blended with the energy and the tech capabilities of the youth. Then the firm will grow and position itself better, deliver itself better. You can work less and derive more. In our office, it's a lights off at 6 o'clock. Nobody works off. Students are checked out at 5:30. Students, partners do not work after 6. No client has left us because of this. Billing and collection, I did mention, bill promptly after rendering the service and collect promptly. Do not give undue credit. On financial planning, from the firm's point of view, having reserves, personal financial planning also, term insurance, medical insurance. Now COVID Suraksha packages are there. All those things we have to think of. A lot of attitudinal changes can happen, HR improvements can happen. And to my students and my younger members, please cut down on social media. It will take away a lot of your valuable time. I do not use WhatsApp. I don't have a Facebook account, but I firmly believe that the face which is right in front of you, I have. So let us look at each other, smile, instead of stooping down, looking at that 3-inch gadget called your smartphone. I'm totally worried about the way the new gen is wasting time on trivia, on trolls and things like that. So please cut down on social media. And members, we have students also in the loop. Let us make our offices a little more student-friendly with an academic culture. They have come to learn, study, develop, and blossom forth as chartered accountants. They are the future of the profession. With all that, our offices should become, end of the day when we leave office, we should be relaxed, happy, a happy organization. You can see the smiley on the right-hand side. It represents the way we should look at life and work. And students do work smart, don't work hard. I have never worked hard in my life. So working smart is working with focus. With all that, if you want to change, yes, then we will see that change is hard at first. It may be messy in the middle, but doubtlessly it will be gorgeous at the end, as famously said by Robin Sharma. Chairman, sir, I have finished. I think its time is 1 o'clock. If there are questions, we'll take a few questions. I will also look at the chat box and see whether there are questions to be answered.
I have a few questions in the chat box.
To all the members who have stayed with us, 136 on record. I hope all of them are there. It is back to the MC now with a big thank you to the chairman. Let me look at the chat now. Sir, what's your opinion on NFRA 2 return to be furnished by auditors? It is not yet notified. I don't think it is made mandatory. Excellent presentation, so thank you. My compliments, Johan Hori, Kiran Nosan, the students' intellectual appetite facilitating both.
So we can scroll up.
Yeah, I'm trying to do that.
Sir, I believe Gautam can read the questions for you so that you can answer.
I think I can. Any doubts or query post? Okay, you didn't. You mentioned some companies use valuation and disclosure issued by LIC without consciously appointing any valuer. It's a service provider. Is this acceptable for disclosure? Yes, LIC's valuation, because they are doing an actuarial valuation internally using the projected unit credit method, PUC method. So it is given in the guidance note also that LIC's valuation statement is there. You don't have to go for a separate valuation or actuary. Sir, to decide whether a company is associate or joint venture, whether the shareholding of promoters who are the directors of the holding company should be taken into account. For example, company A 40%. No, associate definition is clear, and that company director shareholding should not be considered. Though it may be indirectly holding this thing, but it is not required to be. How often can we insist the company to get technical advice on useful life of asset? Unless there are, see, the requirement is to review it annually, but due to cost considerations, the company may not do that. We have to use our judgment and find that if there are no major changes, I think once in 3 years should be okay. That is my personal opinion. Look at strict interpretation of Schedule 2 and things like that. It should be annual. Recently, Bombay High Court held that obsolete stock, laptop and motherboards which are not sold, disposed of as allowable as expenditure under 37. What is the impact of Companies Act for disclosure requirements? Sir, Schedule 2 useful lives may be kept aside for a minute. If we clearly know that even in our offices, some of these electronic equipments, maybe a lap down slips from the table, breaks and it's not repairable. There's no point in carrying it in the books of accounts. They have to be written off. Income tax statement, the High Court's decision on allowing it under Section 37 is fine. Companies Act, if we are writing off fully, under this kind of a situation where there is no utility coming out of the asset, it will match. Otherwise, Companies Act will continue to apply. See, for computer systems, it is only 3 years. I think that is a fair, useful life mentioned under the Companies Act. So disclosure requirements will continue to be the same as in Schedule 2. But there you can say that the writing off of fully obsolete and useless items are outside the scope of Schedule 2. So you can write off 100%. For healthy and normally useful items, we can continue to have the Schedule 2 rates. For that write-off, unless it is a huge amount, in my opinion, on considerations of materiality, separate disclosure is not required. Sir, do we need to mention about exemption of IFCR in the report? No, it is not required. If it is applicable, you give, otherwise you don't have to. So do we need to mention about exemption IFCR that came twice? Is a government company coming under SMC complying with all the requirements of SMC? Yeah, there is no differentiation. Government company also, if it is too small, it is SMC. There is no differentiation between government company and private company. What is your opinion on NFR? I mean, excellent inputs. Could you consider sharing document templates and good practice processes used in our firm? That is Chandrakant Rao. Yeah, we can do that. I can leave my email ID. The branch has SIRC website has, or you can note down cajomonkgeorge@gmail.com. cajomonkgeorge@gmail.com. We can share. Excellent presentation. Thank you. Thank you, Chandrakant sir. Who has said that? Okay. Informative and good presentation. Very excellent presentation. Simple examples. Amazing session, sir. Oh, I'm honored. Are there any exceptions to for consolidate for company having a foreign subsidiary? No, foreign subsidiary should also be consolidated. I think I have attempted to answer all the questions. Let us continue to interact. It will be my pleasure. One, to share the slide deck with you. Two, is that any of the practices which you feel that are good from our experience with the confidentiality of client information, etc. Strictly observed, I can share those good practices. Like for example, a letter of engagement somebody wants. You don't have to reinvent. Mail to me. I'll mail it across. Letter of representation, the format, without client information, and do customize. It's not that I copy from somewhere or you just take what I'm saying. Do customize based on the requirements. So the question suggests that many of you were glued onto the presentation. Truly honored, Naik sir. Thank you very much for the opportunity. If there are no more questions, it is back to Yashaswini for the roundup. With your permission.
Thank you very much, sir. It was indeed a wonderful presentation. And we hope that, even in future, we have a lot of webinars conducted with you as the chief session speaker. I now request CA Abdul Rahman, sir, to propose the vote of thanks. Over to you, sir.
Yes, I deem a great pleasure for giving the vote of thanks. I think all of us has immensely benefit from the fruitful section by both the chairman and past chairman. We have definitely gained much useful insight in company audit and auditing standard. First, I would like to thank our chief guest of the day, CA Dungar Chan Jain, the chairman of SIRC of ICAI, for sparing his valuable time from his busy schedule to attend the virtual CPE meeting. Thank you very much, sir. Secondly, I would like to thank our speaker of the day, CA Jomon George, for giving wonderful presentation on company audit and auditing, covering the various latest guidance issued from the CA Institute and practical aspects of the accounting and auditing issues, including the treatment due to COVID situation. Thank you very much, sir. I would like to thank for the support provided by a technology partner, A1 Logic, who's providing technical support even during lockdown. I would like to thank the staff who are always supportive of the Institute activities. I would like to thank Zoom for providing the platform for hosting such program. Last but not the least, I would like to thank all the members and students who have attended today's program. With these words of gratitude, I would like to conclude the vote of thanks. Thank you.
Thank you very much,
Tomorrow
sir.
at 11 o'clock, again, there is one more webinar. Our two more stalwarts, past Central Council member, CA Nityananda sir, and our most beloved Babu Abraham Kalavayal. So he is also present, CCM. Both will be present. Please log on time and be in large number, so that let our all webinars be grand success. Sir, Jamun sir, it is excellent presentation, very lucidly presented, very clarity. If anybody appears for exam now, they will get 100 out of 100 in this exam. Such a nice presentation you have done. You are
thank you.
You are not only a good leader, you are a good teacher also.
Thank you so much. Thank you.
Good and great teacher difference, a good teacher who understands the subject, whereas a great teacher understands the students. So you are categorized as a great teacher, sir. Thank you very much for being.
Thank you so much. I'm getting a lot of feedback on my mobile through SMS. Praveen Shetty sir has MN Pi has responded. I'm also seeing comments. Welcome note from Bhargav Tandri sir. I saw Shamla ma'am. I said hi to her. She did not respond. So Mangalore, as you know, is very close to my heart and surely love to come down anytime. So let's hope that the vaccine will soon emerge and then we can travel free without any fear or difficulty.
Yes.
Thank you so much.
Thank you very much.
And Yashaswini, good emceeing, very good, seamless comparing. Keep going.
The name itself speaks now. The name itself speaks. Yashaswini.
Yeah. Lot of yashas.
Okay. Yeah. Thank you very much. So see you all tomorrow for this new code for ethics for chartered accountants. Another topic which is very much essential for all the CAs, where we need to be, again moving at the right path.
Even all students are also invited.
Okay, so students are also invited for this webinar. So stay tuned. We will meet again tomorrow, same time, 11 to 1. Thank you once again.
Thank you. Yes, sir.
Thank you all.
Thank you.